The market started to pull back on Thursday, leaving us with a weekly inverted hammer here, and the million-dollar question is now, will this pullback continue, and even worse, will it turn into a more substantial breakdown on the higher time frames? I'm personally not convinced, and let me show you why. So yes, there is an inverted hammer here on the weekly time frame chart, where of course in the upper wick we can understand that sellers were able to step up at that all-time high and push prices back down lower towards the lower third of the weekly range, but they were not able to take out the opening print because we still have ourselves a green-bodied inverted hammer. So sure, some selling pressure, but nothing for expansion of range in the downward direction. If we're thinking about the bar-to-bar count in terms of location, we do have a higher low as well as a higher high, which of course is a brand new all-time high. So yes, structure isn't great, but location is fine, and the overall trend on the weekly time frame chart remains in the upward direction. We have lows, higher lows, we have highs, and certainly a brand new all-time high. So if we were to take out the low of this weekly bar, it wouldn't be unreasonable for a pullback to unfold to test something like 531.40, which is our daily line in the sand, to yield some sort of weekly higher low and potentially continue the trend in the upward direction. I'm not really seeing the evidence here for the coming week's worth of trade to flip into a higher time frame downtrend. Let's go on down to the daily time frame chart, and we'll firstly evaluate this week's expected move. If you're not familiar with this study, check out the video tutorial in the top right-hand corner. If we're contained by the upper bound, the number is at 551. That's obviously implying a new all-time high and a higher high over Thursday's high. You'll also remember from the pre-market prep, the overnight high is also 551, and generally speaking, all-time highs are not set in the post-market session or pre-market session. The lower bound of the weekly expected move is at 538.05, and this is implying a move into the gap from CPI, that FOMC day from back over here Wednesday of 2 weeks ago now. Remember, last Wednesday was a holiday, but it's still mostly aligned with a gap fill reversal, or at least the opportunity for a higher low on the daily time frame chart up and over this retest zone. On the weekly time frame chart, we were just talking about this level, 531.40, as a possible weekly higher low. So I'm still not seeing the evidence here on the sort of weekly or daily for a stronger reversal in the downward direction. Recall that the daily trend is up. We have lows, soft higher lows. We never had an hourly downtrend here. Soft higher lows. We never had an hourly downtrend here. This certainly is starting to become an hourly downtrend, and we'll see that in just a moment. So is it possible that we could search for a more firm and concrete daily higher low? I think the answer is yes. So first and foremost, if we can hold up here over the top of the 3-day balance zone, 544, that's a beautiful spot for a higher low and continuation in the upward direction. Notice that the daily structure, the bar from Friday, did not really suggest a lot of price acceptance underneath this high from the top of the 3-day balance range. We looked underneath, quickly found higher lows and consolidation above, and sort of closed an indecisive doji. If there was going to be some stronger sell-side pressure in this market, I would have imagined falling underneath the Tuesday inside bar low, we would have seen a larger drawdown, or at least a more severe drawdown intraday with a more, substantial downtrend. To be quite frank with you, it was really more of a balanced day on that Friday session. We'll see that on the hourly in just a second. So I just want to recap one more time that a daily higher low can be found here, or a daily higher low can go for a gap fill reversal off of the lower edge of the weekly expected move. As of right now, I'm still not seeing evidence on the daily time frame chart that stronger sellers are really stepping up. It's a very, very strong daily uptrend with these soft higher lows and opportunities for higher lows to continue. Let's take it on down to the hourly now so we can get a little bit more nuanced with the price action. So what do I mean when I say that stronger sellers are still not stepping up in this market? Well, let's take a look at Thursday, right? It's definitely a bearish engulfing bar, and we want to give credit where credit is due. We opened over the high of the Tuesday inside bar, and yet we closed right at the lows, or maybe even slightly under the lows of the Tuesday inside bar. But what actually happened when we broke down underneath Tuesday's lows? Was there an acceleration here? Did the market really extend itself through some of this thin structure? The answer is absolutely not. As a matter of fact, dip buyers actually tried to step up. It wasn't all that successful, but they tried to step up and offer some sort of move back into Tuesday's range. We did not close extremely weak on the lows. There was no hourly lower high that was clearly set underneath the 547. It just didn't happen. So as we look forward to the Friday session, yes, we open on a gap down, But is there any continuation in the downward direction? Again, my answer has to be no. We look underneath the top of the 3-day balance, and remember on the pre-market prep we had talked about the Brigade bolt off of the 543.20 area. It's basically exactly what happens off of the open, and then we go sideways. Did we close inside of the balance range? No. I mean, again, I'm not going to say that this is the strongest close back in the upward direction. We closed right on the upper bound of the overall balance from back here, but I'm still not really seeing it from a stronger seller's perspective. So what does that leave us with in terms of pathing into the upcoming week, and how should we start to navigate the S&P 500? Well, at this point, any holds over 544, I'm thinking about that daily high or low. I'm thinking about how can we pull off risk-reward trades to come into the retest of 547, and then ultimately get into this range looking for continuation into blue sky territories. We know the trend is up. We know momentum is up. We know dip buyers have been rewarded in this market. Once, twice, here's momentum buyers, dip buyers trying to step up here. Are they going to do it again? That's the first key question I have as we come into Monday's session. So again, holding over 544 on the hourly time frame chart, I would start to think of this as a balance range. If we could take out Friday's high, I would at least be looking for quick scalps into 547 here. And then beyond that, you just have, it's got to be the target at the equal highs up around 548.35 and then blue sky territories after that. We know that there's 551 as a weak overnight level that should not act as the firm all-time high. If I turn on the extended hour session, you can see this up here. Here's your 551. That's the overnight high from the sort of Wednesday abbreviated session headed into Thursday, right? The futures traded overnight there for a move in the upward direction. So anyways, that's what I'm seeing in the upward direction. Holds of 544, I think it's rock and roll. We're trying to spot bullish intraday setups to get back to the upside. If it's going to be a rotation under 544, I would be open-minded to some sort of 15-minute lower highs, 5-minute setups with bearish setups inside of the balance range here. Because, again, let's give credit where credit is due. There is a pullback that's taking place. There's a change in tone. The bearish engulfer is not friendly for buyers, but it certainly doesn't seem strong yet to the downward direction. So if I'm really looking for shorts, I've got to be able to say, okay, my stop is clearly going here. I can spot the intraday bearish setup underneath 544, and we'll target the bottom end of the balance range at 540.32, the original bottom of the gap. And if the market decides to go further than that, it's basically a rinse and repeat. I've got to be able to manage my risk on some sort of setup that does this if we're going to trade for the gap close. Now, I'm more interested in a gap fill reversal, so finding longs back off of this level down here, instead of trying to force it at the bottom of the balance range there, 540.32. I think you get much more of an opportunity for a daily higher low, even weekly higher low on the gap fill reversal, which is 537. So it's totally reasonable, and we know we're okay to trade downside this week if we're underneath 544. A lot of the bearish divergences we've been describing in terms of the supporting evidence charts are still very much so in force. So this is the hourly time frame look. I do want to quickly show you, not this dashboard, but the internals dashboard for the end of the week. As we went sideways, again, it's not like we had huge bearish outflows. If this was going to be an, oh my goodness, bearish consolidation, look out below, you would have expected outflows to be more substantial, around negative 300 million. We can also evaluate what took place on the Thursday breakdown. How were the volume flows? They were actually up. We know that just like NVIDIA can push the market around in the upward direction, and we can have bearish divergences in terms of poor breadth, and NVIDIA being the only thing up, it can also be the only thing down. And that's basically what happened on Thursday. It was breaking down aggressively, down about 6.5%, but the volume flows at the exchange level were positive. The advanced decline line was actually more, closer to the zero line than it was to trend lower zone. The index score heavily weights the top components of the S&P, so no surprise to see that negative. More of an intraday indicator, though. The cumulative tick, again, we'll give credit where credit is due. It was red, but remember that substantial reads are net 5,000. Could be positive or negative, depending on which direction we're looking for. This was hardly negative 2,000, not even half of what we would consider a substantial read on that Thursday bearish engulfer. So again, when I'm thinking about whether or not stronger sellers are really getting active in this market, I'm still not seeing the evidence. We could get a pullback. We can get push and pull. Remember that a two-sided market is healthy. You get more sustainable moves out of a two-sided market. So give us this pullback. Give us the daily higher low on the gap fill reversal. great, that's interesting. If we can support here, really high and tight, high or low, just aiming right back at the equal highs here. Let's bring it on over to the QQQ NASDAQ 100, a little bit of an abbreviated session this weekend. We do have some family in town, so let's keep it brief. We've got ourselves inverted hammer, same commentary as the S&Ps. If there is going to be some sort of pullback, we're really focused on this zone down below, around 462. A retest of the breakout point would be fine. Weekly higher low persists. We're trading in the upward direction. Higher high, higher low. All-time high was set. Really nothing bearish to say about the QQQ weekly. Let's drop it on down to a daily time frame chart, throwing back on our drawing set. The weekly expected move is very similar to the S&P. New all-time high. This is not confluence with the overnight high. We'll point that out on the hourly in a moment. And the lower bound is actually above the gap fill reversal. We can see here that the daily trend is up with lows, higher lows, and certainly, again, these are soft higher lows here, never actually getting an hourly downtrend. Starting an hourly downtrend, we could easily get a higher low in this zone. We could go gap fill reversal for a higher low. Hate to be that guy, but you could be all the way down here. This is closer to that weekly area we were just talking about. 462, which is the bottom of this balance. 459.25 would be the line in the sand that I personally use. Now, obviously, it's very likely that you could yield some sort of daily lower high on our way towards that area. So we'll assess that if it takes place. One step at a time. We're still in an uptrend. We're still looking for that higher low as the key sort of component walking forward. I do want to point out on the daily time frame that we have three very equal highs. 1, 2, and 3 flat across the top. This, if we were looking at market profiles today, we would see that as a poor high. That is the improper end of the auction at the all-time high. Generally speaking, I'm looking for that to be repaired. So if we get a daily higher low and rotate back in the upward direction, when we test that, I'm personally looking for a breakout through that level. The number is at 486.75. Let's bring it on down to the hourly time frame chart. Let's continue to get a little bit more nuanced and granular here. Notice that we did not open on a gap up over the Tuesday high from that Thursday session, which is why we basically have the three equal highs across the top. So the breakdown here is a little bit more severe, and there is no attempt from the buyers to get back into the Tuesday range on the breakdown. So are the sellers achieving a little bit more out of the NASDAQ? Yes. Is it really a surprise? No. NVIDIA is, of course, pushing this thing around, and that's basically what's happening here. So, as of right now, you're still over the retest point from the breakout back here. And there's certainly an argument to be made that this is slowing down. We're getting that neutral consolidation on the Friday session. We're not really accelerating the breakdown. If we spot reversals over 477.85, who knows? Maybe this turns into a larger and longer run inverted head and shoulders. Maybe it requires the test of this and then a higher low back above, and then we're trading back up to the equal highs. I can really start to envision these things for higher low pullbacks on the daily time frame chart. I'm not really concerned with this large aggressive breakdown that's going to send markets into a downward spiral. Oh my goodness, look out, we're going to zero. I'm not seeing it here. So where would I start to become concerned? The first, again, air quotes here, concern I would have would be if we start to get price acceptance down here and we're not finding a higher low over 477.85. If we start to break down underneath, I think it's all about the gap close. And what do we know about the daily gap close? It's certainly an offering of a daily higher low. So, as I'm thinking about what could potentially happen this week, I'm just considering the opportunities of a pullback. Are they detrimental? Is it, oh my goodness, markets are just going to get absolutely wiped out? I'm not seeing it. I'm still thinking about the daily and higher time frame trends, which can certainly suggest higher lows across the board. So that's my take out of the QQQ. Obviously, any price acceptance back in here forming some sort of, perhaps pie in the sky cup and handle. As we just noted, this is a really weak and mechanical level. I'd be looking for breakouts over 486.75 into blue sky territory. So that's a couple of brief comments on the NASDAQ. Let's move on over to the IWM. The NASDAQ internals are going to be so similar to the S&P 500. It's not really worth spending that additional time on. Again, we're a little bit crunched for time this week. What do we see out of small caps? Weekly time frame chart, it's right on the cusp of that major balance range, right? We're really trying to navigate some sort of stay on the upside, right? We really want to see some kind of weekly higher low from this perspective here sustain itself over 200. If that's the case, then okay, maybe this is ultimately building out as some sort of bull pennant, bull flag, whatever. As of right now, we're still a little hesitant around this zone. Reason I would say that is because this, of course, still is threatening some sort of head and shoulders. Breaking down through the neckline would be detrimental, and the bottom end of the range would technically be the target from a look above and fail perspective. So, Last week's structural bar, not awful. It is a small green-bodied bar. It doesn't have as much of a meaningful upper wick. I would not call this an inverted hammer. The previous bar certainly was. But notice how we opened near the lows. We looked under the lows of the previous weekly range, and then we closed back inside of that range. So again, trying to give some benefit of the doubt. I still do have some concerns as we move on down to something like a daily time frame. Let's throw the levels back on here, and you can see that the balance range overhead still certainly has the threat of a lower high. Although we did sort of set low, lower low, and maybe higher lows with the hammer candles that started printing on Friday, maybe, the indications of a rounded bottom or trying to hammer out some sort of bottom. I would certainly not call this inverted head and shoulders, right? Your neckline would be this hugely skewed like resistance trend line like so. But perhaps maybe it's just a higher low double bottom. Certainly an opportunity for a Brigade bolt here. Where would we be more comfortable? Small caps, if we're really going to be constructive in the upward direction, we're looking for 202. A higher low over that level might give us look below and fail. Technically, the target would be the rotation to the top end of the range, opposite of the weekly look above and fail that we were just referencing, right? And this keeps us a little bit more, I wouldn't say solid, but comfortable perhaps in terms of the weekly balance range over the major balance range down below. I know this is a lot of balances to keep track of, so let me just be very clear here. This is the major balance below. This is the minor balance that we're trying to navigate. This is the daily range right here, right? So I know it's a lot to juggle, but what we want to do is stay over the major below, get into this more minor balance here, more firmly the midpoint, and best would be a look below and fail on the smaller daily range here to get towards the top of it, correct? And that would avoid the longer run. I'm going to use a blue crayon for this one. Look above and failure back into the major range. That's where the detrimental downside target ultimately comes in. So that's what we're trying to avoid there in blue as a potential path. Let's bring it back on down. We can go to the daily here, just so the charts are oriented properly. We'll bring it on down to the hourly, and we can see all the same indications, basically. A lot of chop and neutrality near this weekly line in the sand, so I think you need some resolution here. I think we want to see this turn into, if it's going to work, right, some sort of double bottom. So main takeaways, like what, Matt, give me the bottom line. What's the deal with the S&P 500? If we're consolidating in this range right here, it's got to be neutral for the S&Ps. I would be bearish if we're underneath 200, and if we're over 202, it's a good first step for that look below and fail. Double bottom neckline is being taken out. That would be constructive. We want to see the higher low here, then ultimately some of this thin structure to retrace in the upward direction. That would be a positive tailwind for the S&P 500. Speaking of tailwinds, let's jump into some sector analysis. We're not going to get too fancy with the ratio charts today and all that, but I do want to just briefly run through these. This is positive. This is helping the S&P out of discretionary, like the breakout up and over this level and the consolidation highs. Energy, it's starting to get a little bit of that counter trend move off of this pivot here. And remember that crude is seeing, if this is going to load, is it? Yes, it is. It is seeing a stronger counter trend move off the lows, so not a shocker to see energy higher. If we look at financials, this did do its job. It held support here at 40.45. We remember that if there is going to be any rotation out of the tech sector into any other sector, the best situation would be a rotation into financials. I like what I'm seeing here into the end of last week. I like the potential for a higher low over 41.20. If this can continue to the top of the range at 42, good to go. I would say that the S&Ps might pull back if the tech sector falls off of a cliff. However, this is going to dampen the blow just a little bit. Industrials, not much to talk about here. Midpoint of the balance range. Communications, continuing to spot that higher low on the pullback here, looks okay. Consumer staples inside of the balance range. Again, no issues. A lot of these charts, right, if we're going to really look for detrimental bearish outcomes in the S&P, they've got to be breaking down on daily trends. We're not there yet. The XLB is the most concerning for some sort of weekly double top. Just not even really threatening the neckline with a major close underneath. I mean, look at the hammer candle on Friday. Can we support over this 88.65? Any rotation to the upside, it's going to at least help. And remember, XLB is like one of the lightest weight sectors in the S&P. Even if it does break down, it's not going to cause, it's not the end of the world for the markets. Here's the XLV. This is helping bulls and bears. Bears are saying, no, this is a risk-off sector. Bulls are saying, no, it's the third heaviest weight sector. This is fine. It's helping the S&P stay at least neutral. So that's a win-win for everybody. TLT, it's cooling off a little bit. It's not continuing this breakout so aggressively. It did outperform the S&Ps by about 2 basis points on the week, but nothing that I would write home about and say, hey, guess what? Risk-off rotation, not the case. Real estate, sideways, nothing to talk about here. XLK, let's have a conversation. Mild pullback. What's the daily trend? Up, lows, higher lows, higher lows. Could we go daily higher low? Could we go daily higher low? Yes. Could we go weekly higher low here? Is it bearish pressure to get to these locations? Absolutely. And that's why we're talking about pullbacks in the S&P 500, but we're not talking about major downtrends in the heaviest weight risk on sector for the marketplace. It's just not there, and I'm still not seeing the evidence for, oh my goodness, duck and cover. We're headed into like a 3-month bearish pullback. I mean, it's got to start at some point. Everything always has to start at some point, but as of right now, the evidence, the probabilities, the percent odds are still favoring the buyers. We're not in daily downtrends in any of the sectors that matter. Semiconductors, pullback, daily higher low, pullback, daily higher low, pullback, weekly higher low down here, which would be a daily equal low to this last major inflection point. Your line in the sand, 237. Again, I'm not trying to hide behind the fact that this would be nasty intraday pressure or intra-week pressure for the S&Ps, but structurally speaking, we're not going to give up the ship. We're not giving up the uptrends, right? Utilities, last but not least, what do we see over here? The breakdown just sort of continues. I like the opportunity for the lower high here. Remember this being a D for defensive sector. If we're going to get some rotation, that's fine. This outperformed back here, a little bit of a pullback, certainly would be welcome at this point in time. I do want to jump over here. I mean, we'll quickly look at the ratio, the major ratio grid. Still risk on. This needs to perform a little bit better financials. We know that that's the risk. This is not a concern. This is not a concern. Ideally, this gets in gear a little bit more firmly in the upward direction. Communication, same idea over here. But as long as this is still checking out in a solid uptrend, we're okay. And we want to primarily see the improvements out of financials. Let's check in on, though, the dollar. This is breaking out, or it's trying to break out on Friday, over the 105.65. So again, if this continues, it wouldn't be surprising to see a little bit of a pullback in the S&P equities. If we look at what's going on with interest rates, though, we're spending more time, we're consolidating underneath that 43.33 key inflection point here. We know that the more time we spend underneath, in theory, that should help out the small cap. So we're thinking about that small cap look below and fail on the daily balance range. The more time the 10-year spends underneath 43.33, I would say the better for the breadth of the market to actually improve. If we take a look at what's going on in the, let's go to bonds. I mean, we'll quickly rifle through some of these risk on, risk off indications. If this is going to load, it's not going to load. We don't have time to stick. Oh, there it is. These are still moving in the downward direction, right? Still moving in the downward direction, speaking to duration risk being favorable for equities down below. I do want to point out credit spreads because these guys have been slowly creeping higher, primarily in the medium term, which is up here. Let me really zoom in on that so we can see it, right? So a small uptick here, but once again, is it risk off? Oh my goodness, run, duck, and cover? No. When we were dealing with the April pullback, which is here on the equities chart, look at where we were at. We're not breaching that area. So I wouldn't be thinking about a longer run sort of pullback in the market right now. It could develop, as we're always saying, it could develop, but in terms of the indications, we're not there yet. Junk bonds in isolation. Come on, think or swim. We've got, places to be, people to see this morning. Give us some better loads here. I do like the fact that this lower high is finally, it's not picture perfect, right? And still, I would make the argument that this to this is a higher low compared to this lower high. But I like that the S&P is at least trying to neutralize and go sideways instead of continuing to be divergent with this massive sort of like, look at this to this, right? And then this to this in the afternoon. The divergences are not continuing to play out. So once again, it is still there. There are bearish discrepancies under the hood, and we're not shying away from pullback shorts, but I don't look at this and say like, oh my goodness, markets are going to zero. And it's been that way for a little while now. Maybe I just sound like a broken record and the weekend updates don't have to be so long with a check-in, but I find it valuable. Here we go with new highs versus lows. So breadth is trying to get better. Small uptick on the week, but still negative. Negative 11 is the closure there. Let's jump on over to, let's go on over to the SPXA 50R. We're sort of all set over here, trying to hang out near the neutral zone. And as we know, if this upticks, great. It speaks to the breadth improving. If you notice that the IWM is going look below and fail, if interest rates on the TNX are under 4.33, again, I can see how this rotation can start to emerge to keep the S&Ps more flat, even if there is some sort of tech sector pullback. So that's one idea that starts to come to mind as we're looking through the data points and things continue to evolve here. I would watch the RSP inside of this range. If it breaks out, again, breadth is improving. You're going to get a broadening of the market rally. If we take out 163, that's okay. Tech pulls back and RSP's under 163. probably hang on tight and look for a deeper pullback in the markets as of right now. Not a major concern as long as we're in that range, towards the top of the range even. Volatility, VIX is going to zero, bro, don't you know? No issues out of that. If we take a look out of the VVIX, this really didn't even accelerate on the Thursday bearish engulfer, probably because it originated on a gap up all-time high, but no issues out of volatility here, suggesting that markets are really in store for a longer run pain point, right? Still in contango out of the futures, out of the 9 versus 30, and the one-day VIX is underneath the 1275 handle is more appropriately what we were looking for. Let's do a quick speed run through the core list of companies, see what's going on. Microsoft here, it looks great, hanging out near these equal highs after a higher low. Breakouts, blue sky territories, nothing to complain about out of Microsoft. Here it is on the hourly. Any consolidation over this point at 447.75. Again, equal high breakouts, blue sky territories. Only concern out of Microsoft is if this ultimately turns into a man ray, aka a double top first. Under the neckline, build a right shoulder. That would be 443.15. If this lower high comes in, great, we'll change our tone. As of right now, Friday's close, not even a thought, as a first indication this week. Apple breaking down underneath the 212. Overhead supply, folks. We're still on the hourly time frame chart. I like the lower high. I like the weakness into the close. I would love to see, at this point, the short should have been on Friday. Hopefully you guys caught it. Again, we had to get out of the office early. People to see, places to be. But this would have been the short. It's not a short dead on the lows. I would actually argue for looking for buyers to step up in this congestion for some sort of rotation back into that 212. So watching that out of Apple, obviously if it moves underneath the 203.75 zone, this little afternoon consolidation from the first big breakout day, then you've got continued thin structure. I would mind the previous all-time high, and then way back down here is 196.50. One step at a time, the primary outcomes would be something like this, back to the upside, right? Next up, we've got NVIDIA, the one stock to rule them all. We can see how really, as goes NVIDIA, as goes the market. You guys want to see a cool setup? Here you go. Let's check this thing out. This is a 5-minute time frame chart, but we do want to bring in, let's just go 3 days here so we can ultimately see what is going on and why this is so important to watch. So as goes NVIDIA, as goes the market. Here is Thursday, right? Gap fill reversal. Look at this. Gap fill, little bit of a reversal. Bearish engulfer really starts to accelerate. No more holding that gap fill reversal, right? Basically, just look at the charts. They're a mirror image of one another. Well, I'll say it one last time. As goes NVIDIA, so does the market, right? It's really as simple as that at this point in time. You should be using it as almost a, I would argue, fourth market internal. Anyways, back on over to the structural chart. What do we see in terms of levels? Daily pullback certainly available here. Notice that, inverted hammer, gap fill reversal, in terms of closing the overhead, closing weak down below on the actual 4 p.m. bell. But if we're over 122.50, the hourly chart's a little bit airier, if you will. You can sort of see the structure a bit better. As long as we're over this, I would not throw in the towel on NVIDIA. I would really love to see, okay, we got this pullback. Is it possible that we could get a higher low? Remember in the previous instance of NVIDIA giving us a bearish engulfer, and this was really coincided with SMCI, it's so funny how the market rhymes, right? Look at the first bearish engulfer. Look at the first bearish engulfer. What candle followed that up? Bearish inverted hammer. What do we have currently, right? So it's very possible, and notice where we were at in terms of the previous structure, where we're at in terms of the previous structure. Again, some of this is just happenstance, and I wouldn't second mortgage the house on these types of ideas, but it just shows you what's possible out of NVIDIA. It doesn't mean that we have to fall off of a cliff and go to zero here. It's very possible that NVIDIA goes sideways over this inflection point, cools off, and then maybe once we actually build a daily reversal via some sort of double top under a neckline, that's where a more aggressive trade comes in. So I wouldn't say that going out and shorting NVIDIA is a top of mind priority right now as it's pulled back for 2 days. I mean, certainly let's not lose sight of the underpinnings underneath us. Let's take a look at Google breaking out of this nasty sloppy range on the hourly charts here. So I like what I'm seeing. It's got to prove it though. It's got to complete the sequence. Early in the week, I would be looking for higher lows over 178.25 and continuation into blue sky territories. AMZN, what do we see over here? Loving the rounded bottom. Equal highs were the target off of this higher low on Thursday, so that actually worked out great. Kudos to anybody who got the gap fill reversal on Friday and held into the close. So even amongst tech itself, right? Apple breaking down aggressively into the close. Look at Amazon. ripping into, obviously upside. Now, one of the things here is the rebalance out of the XLK as the technology ETF. So you're seeing the Apple selling for that reason. You're probably going to see some NVIDIA buying for that reason as well. The rebalance was on Friday. It's going to be complete by the time the market opens up on Monday. So, that certainly has something to do with it. But for the most part, as long as not every single tech component here is, down 1.5, 2% on the day, you're not going to have Armageddon style selling in the S&P. One of the things we have to remember is that, yes, so goes NVIDIA, so goes the market. But if you're looking for a longer run, period of selling in the market, a deeper pullback, a 2-week, 3-week correction, so have you, it's going to require that all of the sectors are red to some degree. And as of right now, again, you can just see clearly it's not the case at all. So as I'm looking through the components, I also don't see, at the tech sector level, looking into that at the major heavyweight components, I'm not seeing the ingredients for a nasty breakdown, right? Anyways, Amazon, any consolidation up here, looking for continuation in the upward direction. The daily chart, if this could resolve over this into blue sky territories, I think we're looking at a positive tailwind for the XLY, which is going to be really helpful for that sort of rotation amongst the sectors themselves. Remember, XLY is risk on in nature, so liking what we're seeing out of the overall structure. Lows, higher lows, higher lows. Can we break out through this equal high sort of zone? 190, 191, blue sky territories above. Spent too much time on that. Let's move along to the metaverse. Liking the mild pullback, slow and controlled, not Armageddon, not large red-bodied bars sequentially like this underneath the bottom of the balance from back here. Mild pullback. We're thinking about, if we go down to the hourly time frame chart, we've got ourselves the Man Ray in force already. And again, it's not Manta Ray, it's Man Ray. There's your neckline, 493. Breakdown, great. Show me the pullback into this zone. Willing to take shorts from point A to point B down here. When we get to point B, show me the gap fill reversal, daily high or low over the top of the breakout point from over here. Something that looks like this. Rock and roll. I'm all aboard. Next up, we've got Tesla. Can't get out of its own way. So this continues to just be a back burner idea. If it can show me some love over 185.75, great. We'll look for the 198.85. If you look at the daily time frame chart, weekly time frame chart, you've got some indications of like a longer run reversal. The fact that the stock did not break down more aggressively here or here, the pay package comp, it certainly caused a gap up, not a gap down. So you've got some longer run indications that maybe buyers are trying to be a bit more steadfast out of Tesla, but until it can actually clear some of these power lines, as I'd call them, overhead, just really lackluster in terms of setup. JP Morgan, beautiful trade on Friday. Again, for anybody who was sort of tuned in or tapped into the pre-market show, we were talking about the daily downtrend, which is in force, right? So this lower high is ultimately set, highs, lower highs, lower highs, lower highs. And at this point, I would argue that any continued consolidation, I know we closed right at the level, but if early on in the week we're underneath 196.35, this is bearish consolidation looking for the equal lows. I'd be targeting down here 192s, 190s underneath that. If you go back to the daily time frame chart again, downtrend happening here, underneath the balance range. These lows, 190, this pullback, that's basically your target. So the daily structure is a little bit more favorable for the bulls, so we want to keep an open mind here. That's one of the things that the daily chart is really good at. It's also off of the daily 50 SMA. So if you're over 196.35, if we just go back down to the hourly, traversing these time frames, if you're in here, I would be sort of skeptical of the short. If you're down here, I would be thinking about equal low breakdowns, follow through into this level, right? So 196.35 is your major arbiter of price headed into the early stages this week. Netflix, the unstoppable freight train might be back at it. Notice the look underneath this sort of, whoa, what's going on with the zoom? Not a fan of that. We looked underneath these large upper wicks on Friday. Closed back above. Any consolidation here, I think that it's just back on its grind, doing this sort of deal in the upward direction. As we know, the all-time high is $700.99. That's not a typo. It was 1 penny shy of the round figure at 701. So that's what we have to the upside as a possible target. And I would just make the argument that it's not a short. You're looking for longs as long as you're over 674.75. If you drop below 674.75, I do think you can start to get a thin structure retracement. The major target would be down here at 656, but bullish until proven otherwise out of Netflix. AMD, last but not least for the core list. Then I've got 2 ideas for you. Hopefully you stuck around until the end. What do we see? Got to give credit where credit is due, as a rotation out of NVIDIA into AMD. It was clear as day on that Thursday session. So again, credit where credit is due, avoiding the breakdown down here. Still just inside of the consolidation range, though. So as I'm looking at this, maybe this is like higher low, maybe like basically, again, here's the daily chart and how it really can sort of give us some better context at times. If this is the longer run balance range, look below and fail on momentum, hammer candle on Friday. So if that's the setup that's in play, then I think we could all agree that the long is probably over the Friday high into the top of the balance to complete the look below and fail. The best long, of course, is just clearing the top of the range for something that does this, saying, hey, all of this is demand underneath us. Longs are made content. Anybody who's short is now absolutely pinched out of AMD over 168.60. So those are some higher time frame ideas. But back down on the hourly chart, you've got to at least clear that hurdle first. You've got to show me this on the hourly. And even at that, you're trading in the midpoint of the range. You know what they say, don't diddle in the middle, don't enter in the center. There's a number of these things, but generally, that's one of the concerns I have about this particular level. I think it's worth trading because you do have some thin structure overhead from that Thursday momentum. And you do have the buyers stepping up here, but just maybe keep in mind smaller size, keep in mind the overall location. Those things are just top of mind as navigating AMD. If you're down here and you never break out over that Friday high, again, it's just consolidation in the lower 50% of the balance range. Ultimately, I think that the breakdown could happen once again, especially, again, I know I say again too much, but this is in the context of a semiconductor ETF that could be pulling back more aggressively. If semiconductors not completely fall out of fashion, but if they are going to go for a deeper pullback, I mean, AMD relative to NVIDIA is the weakling. So it certainly should break on down if semis again are going to fall out of fashion. You could look at things like, you could go over to Micron real quick. Even this looks better, right? At least for a structural opportunity on this higher low over 130. Just as a quick example, Qualcomm, right? Let's come over here. I mean, we're certainly underneath. Micron was like pulling back. Whoa, what's up with this funky zoom? And the load time's a little slow on Thinkorswim this morning. Maybe just some Saturday issues. But anyways, like this type of idea is what we're looking for out of Micron. We're underneath already out of Qualcomm, but any consolidation in this range, like weekly high or low, is certainly possible. How's the trend line? Something like this is a possible idea. So these are not the two additional ideas, but I'm just giving you an idea about the semiconductor ETF. Let's move along to the two ideas, though. Now we're just repeating the same words over and over and over again. So we've got to make it a point to be better. Here we have it. Palo Alto. What do we see? Cup and handle, beautiful sideways consolidation, not really an aggressive fall. Not even. It's zero, zilch, nada. No follow through from the bearish breakdown on Thursday. Look at the close on Friday. Equal highs here and a gap to close overhead. So this was an idea back over here looking for the same thing, but it ultimately yielded some sort of cup and handle. So anyways, over 324.50, gap to close overhead. Very, very interested in this setup. So that's Palo Alto. And next up is ABNB, Airbnb. What do we see out of Airbnb? This was on watch after the big bearish breakdown here. We were thinking about, okay, maybe it's not going to happen today, tomorrow, the next day. And that was correct, but this right shoulder is building out. We also have a gap to close overhead in Airbnb. Over 149.50, which we closed right on it on Friday. Inside bars, this is basically a 4-day balance here. If we break out over that, there's some gap to close into 156. So two ideas, both looking in the upward direction. Obviously, Palo Alto, it's not, it's not in the semiconductor space. It's totally separate to that, right? Certainly technology, but separate to semiconductors, so that's interesting. And Airbnb, also non-related to semiconductors. So if there is going to be some sort of rotation, these two names strike me as pretty decent opportunities to watch into the upcoming week's worth of trade. Hopefully you enjoyed today's, I don't even know if it was abbreviated, updated weekend session. If I had to guess, we're probably coming up on like 35, 45 minutes perhaps, but it's better than the hour plus episode. It was also one take. So if you enjoyed it, let me know down below in the comment section. If you learned anything new, let me know down below in the comment section or by simply giving the video a thumbs up. That always goes a long way. We hope to see you on Monday morning for the pre-market prep kicking off at 8 o'clock as it typically does. We'll run through all of the charts again and we'll make sure we're well prepared with all of the data points in consideration. With that said, enjoy your weekends and have a green trading week.